What an interesting combination of speakers, and conceptually, it's very meaningfully tailored to make sure that value advantage is there for the audience. Extraordinary response when we announced the insurance webinar. Thank you, one and all, for joining. We live in a changing world, extraordinary set of changes and challenges we are facing. Since the pandemic pronouncement, we have measured the risk in 4 forms. The economic risk and governance, which materially impact the global economies. Fiscal and monetary prudence have been aligned to make sure we bring in financial stability to the economies. The economic momentum is not simple disruption. This is a paralysis in total terms. In 2008, it was confined to financial sector. The liquidity crisis moved into a funding crisis. Funding crisis moved into a solvency crisis, then sovereign issues. Now what we are witnessing is hitherto unseen after 1930 depression. Over $25 trillion have been pumped so far by global economists. Advanced economies are grossly underperforming to the tune of 8% in aggregate terms, contraction in substance. Developing economies, emerging markets, again, is going to underperform to the tune of 3%. Globally, there is a contraction of 4.9% according to International Monetary Fund. OECD has different spell. And again, there is a possibility of second wave. We don't know what sort of recovery mechanism, whether it is U-shape or V-shape or W. We don't have an answer. The second wave is already on. Countries who have prematurely reopened are facing the consequence. They are coming back to the track again for shutting down the economies. We have seen the reflection in terms of monetary policy. The technocrats, the regulators have to make sure there's a perfect alignment between the monetary policy and fiscal framework. The debt servicing capacity has to be improved. The liquidity has to be improved. The lowering the interest rate, postponing the installments and interest, giving concessional advantage to relationships might improve the solvency. The purpose is to make sure from disaster recovery, we move to business continuity. That is precisely measured and getting managed. On the social risk side, we are seeing sustainability is getting challenged. We have to recognize eradication of extreme poverty is a bigger challenge. Food security is a major thrust. Education, online, offline, offshore, onshore, are all getting experimented. Gender equality, this is an opportunity for us to recognize. And we are also making sure we have to focus on changing the energy mix, creating carbon neutral society, if not, at least making sure lesser carbon emission is a way forward. Peace, truth in action, justice, institutions have to come to digital governance to engage in resolving the conflicts. So the global cooperation and coordination between the developed world, developing world has to focus on gross welfare to the mass. Humanity, human prosperity, human dignity is at stake. That's the simple message. On the environmental side, the risk is widening. We have to look at cautiously factoring environment into trade. Trade is contracting to the tune of 35 to 40% in merchandise terms, and service terms, maybe more. WTO says this is completely out of order. The recent spell of WHO, either we swim together or sink together, is a food for thought. That is precisely the situation. The human catastrophe to the tune of 33 million people as we speak, a loss of nearly 996,000 people, is not ordinary. It's a huge tragedy. So we have to measure the risk, manage the risk, map these risks into policies, procedures, process to make sure human dignity is restored. That is the purpose of today's submission. Qatar itself has engaged very wisely. Qatar's economic governance stands tall, and healthcare, as we speak today, mortality is around 215 people. We have tested more than 25% of the population. Let me show you the clips. Perhaps that will give an insight of what's happening across the globe and in Qatar. Here is the changing face of the world. We are witnessing extraordinary set of challenges in terms of business continuity. Now, in terms of global economy, the outlook has been spelled out. Lowering interest rate as a monetary tool has been accommodative. Globally, a synchronized action has been pronounced, and everyone is engaged in containing the interest rate for a medium and long term. And global insurance market here
is undergoing a perfect storm. Changing customer demands, advances in technology, increases in data, the impact of natural disasters, shifting demographics, and evolving regulations are just some of the factors combining to shake the industry to its roots. Customers want more from their insurance. Whether businesses, consumers, or businesses offering services to consumers, they all now expect the speed and elegance of digital retail. Conducting business when they want, where they want, using the channel of their choice. And customers are increasingly savvy and able to compare offerings and prices with the competition in an instant. Technology is creating a wealth of new possibilities. The advent of big data creates opportunities for insurers to make use of unprecedented insights into their end customers' life, property, health, wealth, and behavioral patterns. Advances in artificial intelligence are allowing insurers to sift through this data quickly and efficiently, enabling more personalized approaches to risk management, reduced liabilities, and lower premiums in return. The ability to access data faster than ever before also allows insurers to settle claims more quickly. What used to take weeks and months is now happening in days or hours.
So that's the future trend of insurance: changing customer demands, advancement in technology, increase in data, impact on the natural disasters, shifting demographics. Again, regulators are redefining the game. What about the future of underwriting? The disruption due to new technologies, the climate change, as I mentioned, shift in demographics, what the underwriters have to offer. What we need is a sophisticated risk assessment with digital approach, convergence of digital industry, digital tools to promote maximum value advantage. And again, the underwriters will be data scientists. Customer service, value proposition should be confined to problem solving, solutions, not the products. And that's what this clip is all about. So what about claims? What will happen to insurance claims? Is it going to be manual? Is it going to be fully digital? How technology will be embedded? It will be fully embedded in substance. Risk is to be mapped and mitigated even before they arise. That's the substance. And customer interaction in omni-channels, irrespective of the channel where you come from, whichever be the mobile commerce, you have to make sure you recognize this and enhance the speed, accuracy, cost efficiency. It means, again, it's customer-centric and customer satisfaction. That's the level of sophistication we are talking about. It's evolving as a perfect digital tool in the coming days. Those who embrace the change will sustain their meritocracy and their business model and continuity. Those who are not will perish. That's what we are reading. What about the global side in total terms? Here is a clip.
How could insurers be more customer-focused when it comes to a claim? Everything becomes much smarter and connected. Homes, cars, and health monitoring. Risks are mitigated before they even arise. Be it the washing machine detecting increased electricity consumption, the GPS-based push notification notifying a hailstorm, or personal health device recommending a rest. In case of an incident, it is the insurer reaching out to Jonathan proactively, already knowing that something, maybe even exactly what has happened. The insurer offers a solution and is able to organize the service delivery with a message to the customer that everything has been handled in a few minutes. Help is being provided instantly and damages will be assessed quickly using latest technology. If Jonathan allows, the insurer will be able to provide very personal assistance and monitoring, resulting in an entirely different customer experience than nowadays. This all creates a better outcome for customers and insurers alike, with clearly more convenience and increased customer satisfaction rates.
So that's the reflection on the claim. On the global insurance side, we are seeing already there's a contraction on the non-life. And again, the hardest is to premium, as I said earlier, the travel related, the trade related. We are seeing, despite global recession, there are some possibilities of revival in certain emerging markets. But we don't have definite indications. Nobody could predict or predicate the way forward. Unless we have clinical solutions, the entire engagement in terms of global administration for the humanity is visible. We are not sure about tomorrow. Profitabilities are getting challenged. Business disruptions means definite contraction in your productivity and profitability. In the midst, how Qatar economy is going to perform. Obviously, the hydrocarbon is a major thrust. Qatar is moving in the right direction for sustainable value creation based on 2030 vision. But the economy is going to contract, no question. We are seeing not less than 5 to 6% contraction. I met the finance minister last Wednesday. He's cautiously optimistic. They are managing the healthcare well. It's a huge bill footed already. The healthcare system is working well. The alignment between monetary fiscal is happening. They pumped nearly 75 billion Qatari riyal. But the economic outlook is going to be challenging for the short term. But the monetary and the financial stability is definitely there. Qatar's reserves, external reserves to the tune of 380 billion will be the greatest support. The country's reserves, including the central bank cash and gold, along with the external assets, is twice of the GDP. It means financial stability is there. Let's watch the prospects for Qatar.
Located on the region's busiest shipping route, Qatar is perfectly positioned for international trade, with direct air and sea connections to Asia, Africa, and Europe. Qatar is becoming a leading destination for next-generation business models. Its thriving, knowledge-based economy has helped secure its place among the most competitive business environments in the world, an ideal destination for foreign investment. The past 4 decades have seen a 9-fold increase in Qatar's population to 2.7 million. The current political blockade by neighbouring countries has only served to strengthen the nation's self-sufficiency, and strategic investment continues to accelerate. Qatar has already spent $33 billion on infrastructure projects, with new contracts to be awarded over the next 3 years, not least with the 2022 FIFA World Cup on the horizon. The national strategy, Vision 2030, is even more ambitious. Qatar is known as the world's leading supplier of liquefied natural gas and a leading player in aviation and sports and the media.
So that's the economy. When it comes to insurance market, there are possibilities both in the hydrocarbon, non-hydrocarbon, on the Medicare side. We have seen the commitment of government of Qatar. And how do we leverage on the insurance side? Pre-COVID, insurance companies were profitable, no question about it. Now, post-COVID, or even the current context, what will be the reflection? That's what we should understand. So, opportunities there in terms of hydrocarbon. It's going to move from 77 to 110 by 2025. By 2027, 127 million metric ton. That's huge in substance. In terms of overall, if I put in one fabric, in terms of oil, indexed Qatar natural gas is priced. So essentially, we are talking about 6 million barrels of oil production and distribution. Emerging market incrementally consuming LNG because it's energy efficient, environment friendly. That's the opportunity, whether it is direction of insurance policies, whether it is contract or machinery breakdown. There are possibilities of offerings by insurance companies on the hydrocarbon side. On the stadium side, definitely this is an engineering marvel. We have seen airport, seaport, road, rail, they're all shaping up. The non-hydrocarbon is here to grow again. With FIFA stadiums, we have the possibilities to further support the mission in terms of insurance products. Now, it's all happening in terms of overall economic momentum. The credit expansion of the system, if you see, it's around 6% for the first 8 months. The deposits have grown by nearly 3.5%. We have also seen the reflection in terms of real estate to the tune of 3%. Consumption has grown by 3%. So there is a momentum in terms of overall economy. But substance remains, how do we leverage as an insurance industry? How do we recognize the key projects? How do we customize solutions for every single segment? When it comes to labor, workman compensation is possible. We have free zones coming up. We have reasons to believe the airport or seaport or road or rail, there are enough contract financing is taking place. Laborers are getting in. Project space is still an opportunity for us to explore. On the air cargo or sea cargo, marine side, we can explore the possibilities. We have 3 free zones. 3 billion has been allocated rather. We have reasons to believe on the Medicare side, free zone employees can be supported. Fintech is shaping up in terms of convergence of banking and technology, or financial service and technology. Stocks or insurance or banking is converging in substance. Technology can be an enabler, again, allied insurance. So when it comes to financial center, it's arguably one of the world-class infrastructure, whether business or regulatory. We have opportunities for sports, digital, financial, and media. And that's where we're going to see the combined power of Qatar. On the one side, commodity-driven, and again, the financial stability is an opportunity. Professional indemnity is a major opportunity for us to cover through. Property laws have been redefined. We have foreigners can get in. The law has been quite prolific to support a mission. There are designated areas where they can invest 100%. You have public-private partnership model shaping up. Property insurance can be supplemented, and food security is another area where Qatar is becoming self-reliant. We have, for 3 million people, not less than 2 years, at least we have food security in many pockets. That's an opportunity again to cover insurance product. Product liability can be covered. So that's the sum of the bigger picture, both in global terms for the insurance industry, for Qatar. Now, the combination of speakers we have lined up is something which is going to be a treat to the audience. What a combination of speakers, what a splendid flow of communications in terms of intelligent insurance inputs. This is very much required for us to interpret the right kind of business remodeling. The transformation in the insurance industry is visible. The changes which are required, the challenges which you are facing, the insurance industry is going through extraordinary set of reorganization. The structure and substance are getting redefined. The remedial solutions which are required to sustain the meritocracy for business continuity comes out of solutions which is customer centric. That's what everyone is trying to advocate. But the steps are very many. The intriguing complexities are to be understood, and we have to get set. And that's the purpose of the webinar. I'm sure it's worth the time. I know we, spent more than the required time, but the kind of, substance you got today, the viewers, I'm sure you will appreciate their energy, enthusiasm, and the input they have given to you for your business remodeling and prosperity. Thank you again for joining. I compliment the speakers once again. Good evening. Thank you all.